another recession in 1990 as the tech bubble blew, and then the home supply shot up, right? And then a massive recession with the 9/11, right? And the housing market crash. So anytime home supply gets up, you have a recession. And look at this. Last year when Vincenzo started making videos, last March and April, we were down 4.5%, 5%. And I thought by the end of last year, we would be pushing, as I called it, upper resistance at 7%. And then we would have to get rejected a little bit to back test. Just like you do in a stock, we hit that 7%, almost 6.3, 7% on the dot in October of 2021. Then we got rejected, back tested the lower support of right here, back here in 2008, and 2017, and 2019, and now we're going up again. And I think we're about to breach this. And this is kind of like a cup and handle. If you're looking at a stock, here's your cup, right?
Don't beat the Rex eyebrow. Good evening on this increasingly dark, hot, sticky, uncomfortable early summer, early June. This is Vincenzo's Gold Crypto Investing, where you like, subscribe, and share for a one-of-a-kind, probability-based trading alert and the Rex eyebrow.
You got your handle up here, and now this is the bullish breakout. And I think you're going to end up in the next 12 months, you're going to be pushing the 9% home supply. And when you have a 9% home supply, I think by then you're going to have interest rates on a 30-year fixed mortgage up here by the end of the year at 6 or 7%. So you got 6-7% interest on your home. That's bringing your mortgage to $1,600 on a $240,000 30-year fix with decent credit score, from where it just was at the beginning of last year, only $980. So what do you think is going to happen when your mortgage is up 40% because of interest rates for the same property? Home supply skyrocketing. The cost to build new homes is through the roof, so you can't do that. What do you think is going to happen to the existing home prices, right? When people can't buy it. Initially, existing homes might go up because you're not building new homes. As interest rates continue to rise from 4.25% or 4.5% to 5% to 6%, the buyers that are still there dry up. Now you're looking at a home supply over here, instead of being at 6.3%, is up here at 9% and rising, along with interest rates that are now at 6-7% and rising, right? What do you think is going to happen? The housing market's going to collapse and roll over on itself, and you're going to have a financial crisis. Because if you go back here to the old stock market, you can see what's going on with the government bonds, right? Look at the U.S. 10-year Treasury, right? Look at it. It's 2.4% now. It's still historically low, and it's still very cheap. But when you have all this debt the United States has, it's a massive problem. And you can see another thing that Vincenzo put last year. Look at this. This was put last year. 10-year government bonds have been manipulated since 1980, with interest rates and hyperinflation starting to take over. I expect prices to move up here on a huge move over the next couple of years. And I made this when the price last year was down in here and rising, right? And then we diagnosed how I thought this was a target coming up soon. And I think before you know it, these 10-year bonds are going to try to come up here without government manipulation. And I don't think there's anything they can do about it. And if you have bonds now that are breaking out of this bull market in bonds, right? Because you had yields falling and money was cheap. That makes free money everywhere. You can see we've had this bottoming out pattern and this falling channel for 40 years, and now it's breaking the other way. And if you breach this 200-day, there's nothing in the way between there and 9.5% interest. And if you have 9.5% bond yield, right? What do you think is going to happen over here? You're going to have an interest rate that is north of 7%, right? And then you're going to have a home supply north of all-time highs at 9 to 10 to 12 and rising, right? And you're going to have housing that nobody can afford. 7% interest. Nobody can afford that. No one can afford that because they don't have any money to put down. It's going to be a disaster. You guys need to be aware of this. Like, subscribe, and share to Vincenzo's Go Crypto Investing. Peace and love. Peace and love.